Welcome back to Portfolio, everyone. And in this video, we're going over 5 high growth stocks you can buy right now during this most recent dip. All of these companies have dipped at least 10% from their recent highs, so now would be a nice time to jump in and buy these growth stocks. In yesterday's video, we went over some high dividend stocks for those people looking for income. So if you're looking for some nice high yielding stocks, check out that video. But in today's video, we're going to get rid of the income, focus on some fast, high growth stocks on the market today. Every single one of these companies are profitable. They have fast growing revenues year over year, and their share prices have been on fire. But we've finally seen some red in the market, and over the past couple weeks, the shares prices have been declining. So now may be a nice buying opportunity to jump in and grab these shares. All of these companies are trading at least a 10% decline from their most recent highs. So thank you for tuning in, everyone. I am the Gen Z investor, and every single day we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please hit that like button and subscribe, and we're going to get right into the first high growth stock you can buy this week. Stock number 1 on our list today is PayPal. This company's been on fire, up over 84% in the past year. And if we take a look at a longer term perspective, up over 468% over the past 5 years. Currently being traded around $183 a share. This company's market cap is around $223 billion. And you can see here on the 52-week range, they have seen a decline, no longer trading at that 52-week high, and back somewhat a little bit closer to the middle on that 52-week chart. And if we take a look from their past high of $210 in this most recent month, shares are down a crazy 12.78%. So this company's been on fire. Their market only continues to grow as people shift towards buying more items online and staying away from physical retail locations. So this is a company that will continue to flourish. And if we take a look at what analysts are expecting for their future growth, they believe next year the company is going to grow at a rate of over 23%. And they believe over the next 5 years, they're going to average 23 to 24% growth each and every year over the next 5 years. And if we take a look at the stock chart, shares grew over 400% over the past 5 years when they averaged 24% growth in the past. So this company can continue that fast growth moving forward. We can expect some nice share price appreciation. And like I mentioned, every single one of these companies are profitable. Growth companies right now are still seeing surges even when they are not making any money. So on this list today, all 5 of these companies are profitable over the past 3 years. So if we take a look at PayPal, they have beautiful total revenue growth year over year, strong upward trend where 5 years ago total revenue was around $9.2 billion, all the way up to $19.2 billion in the past 12 months. If we take a look at their net income chart, follows a very similar trend. Strong upward movement year over year, and this company continues to earn nice profits year over year. And for every single company on this list, we're going to take a quick peek at their price target. So right now, price target from 38 different analysts, the average chart for where they expect PayPal to be within the next 12 months is around $220 a share, representing close to a 20% potential upside from their current share price. So PayPal is a beast. They're a company that I believe will continue to operate long into the future, and I believe their overall market and customer base is only growing during this pandemic when people are spending more time shopping online. And now that they've declined over 12% in a matter of weeks, now may be a nice time to jump in and buy this high growth stock. Stock number 2 on the list today is another massive company and a very popular stock that gets talked about all the time, which is Netflix. Of course, the media and entertainment giant, up 66% over the past 12 months, trading around $481 a share. Another massive company with a $211 billion market cap. And you can see here once again on the 52-week range, decline, no longer trading at that all-time high. A couple weeks ago when we saw this tech surge, we saw companies being traded always at new all-time highs each and every day. But now when we take a look at this stock, a decline as of late, nowhere near that all-time high right now. And if we take a look at the 1-month chart again, down over 13% from their most recent high in the past month. So we know this past week has finally shown some red, and now these companies may be attractive price points where they might have been overvalued by 10 to 15%, but now we've seen that pullback of over 10%, and these companies may be attractive to some investors looking for some high growth. If we take a look at Netflix again, their total revenues, similar to PayPal, beautiful upward trend. 5 years ago, revenue of around $6.7 billion, up to over $22 billion in the past year. And net income, once again, profitable each and every year over the past 5 years, up to $2.6 billion in total net income over the past 12 months. And you can see here a rapid surge of late in their net income numbers. And a price target for Netflix over the next year shows a 14% potential upside on average from 37 different analysts, which represents a $55 price point expectation in 12 months. Stock number 3 is actually the smallest cap company on this list, maybe not as well known as PayPal or Netflix. It is the Trade Desk, ticker symbol TTD, up to around $416 a share. Stock price has more than doubled in the past year, up 103%. This market cap is only around $20 billion for this company. You can see here on the 52-week range, we have seen a nice pullback. And over the past month, shares have seen a big decline of close to 19%. So a 19% decline in the past couple of weeks may make this company attractive right now at this price point. If we take a look at their revenue statement, this is a very small company currently trading with a market cap of just shy of $20 billion, and they've brought in $680 million of total revenue in the past 12 months, which has once again been growing nicely year over year. And if we take a look at net income, like I mentioned, this company is profitable. They've been profitable over the past 5 years and consistent growth year over year with that net income. So this is a smaller cap company to take a look at. You can see here they have a price target of around $510 over the next 12 months, representing 22% potential upside from their current price point right now at around that $418 range. So this was stock number 3. We talked about PayPal, Netflix, and now the Trade Desk, which is a smaller cap company compared to those massive giants on the market. Moving on, stock number 4 is another massive company, Nvidia, with a $303 billion market cap, absolutely insane, up 168% over the past 12 months. Currently being traded around $486 a share. You can see here another company that's seen a slight pullback over the past few weeks. This is a dividend paying growth stock, but when we take a look at that yield, we will actually pretend like the dividend isn't there. Yield of 0.13%. A 0.1%, 0.13% dividend, extremely minimal dividend yield, very tiny where that dividend is almost non-existent. If we take a look at their 1 month price chart, you can see here decline of over 15% from their high a few weeks ago. So this massive 15% decline might make this an attractive opportunity for people who want to invest in the shares of this company who are up 168% over the past year and up over 2,000% over the past 5 years. And take a look at their revenue statement. Nice upward trend in revenue year over year. You can see here constant revenue growth over the long term. And once again, nice growth in earnings here over the long term once again. Slight pullback in the past 12 months, but you can see here beautiful upward trend over the past 5 years in total. Taking a look at that minimal dividend of 0.13%, their payout ratio is only 7% of earnings. So you know that dividend is extremely safe. And although when you buy this company, you don't even think of that dividend, they're paying out an annual payout of 64 cents per share when you're paying $486 per one share. So you can see here that dividend is really nothing. The shares move much more. You can see on a 1 day price chart, shares dropped over $5, which only represented a 1.2% change. And your dividend for an entire 12 months is only 64 cents. Very tiny payout ratio. And of course, this is a dividend growth company. They've been growing their dividend at a rate of over 13% over the past 5 years. If we take a look at their price target over the next 12 months, you can see here $552 price point in 12 months. That is of course expected, which represents a 13.5% growth from the current share price. The fifth and final growth stock we have to take a look at today, I believe is going to get a lot of news headlines moving forward, and that is Salesforce, ticker symbol CRM, around $243 a share, up 65% over the past 12 months. This is a company where, once again, they've seen a nice pullback away from that 52-week high, market cap of $225 billion. Over the past month, you can see here they have seen a slight decline of over 13.5%, which once again could make this company attractive right now. And if we take a look, revenue, beautiful growth year over year. 5 years ago, revenue of 6.6 billion, up to over 19.3 billion in the past 12 months. Consistent, beautiful, double-digit growth year over year, exactly what we're expecting from a high-growth stock. Taking a look at that net income, fluctuations in net income year over year, but like I mentioned, profitable over the past 4 years, which is nice to see. And in the past 12 months, they've generated record high net income numbers. So that was the final company on the list, but of course that price target over the next 12 months from CNN represents around a 13% potential upside in a price target for $275 a share. So thank you for tuning in, everyone. Those were 5 high growth stocks you can check out right now. All of those growth stocks have seen a decline of at least 10% over the past few weeks, which once again may make this a nice time to jump in and buy. All 5 companies are profitable. I only like investing in companies that are profitable and actually bring in positive earnings year over year. And all of these companies have been posting nice double-digit revenue growth and have high price targets for this company over the short term as well as the long term. So thank you for tuning in, everyone. I am the Gen Z Investor, and I will see you in tomorrow's video.